What is going on YouTube? The Dividend Stock King here with another video. In today's video, we're talking about is investing, what's the difference between, is investing in stocks different from gambling? I can see where you can see the similarities because, the stock market, stocks can go down and you can lose money just like in gambling. You don't have much control over the market because you pretty much taking the risk. Because company can fall all the way through and you can lose a lot of money. So I see the similarities. I really do. The difference between a stock and gambling is this: a stock, first of all, number one, is an asset. You gambling, you can never get passive income from gambling. I'm talking about gambling like going to Vegas, blackjack, 21, playing cards. Roulette tables. First of all, you gambling your money, you're risking it, you could either win or lose, okay, at that moment. With a stock, you can win over time or lose over time. So even if a stock, even if a stock, let's say Main Street Capital, and let's just say they start going downhill and they're losing and they're kind of going down the tubes. I'm up $476, so I could lose. I mean, that's my total return. I gained that much money, so if I can, I could sell it and make $100 profit and get out of it. With gambling, you can't. Once you lose the money, you lost it. The odds are against you. Another thing about the stock market. So the stock market is an asset. You're buying assets. Gambling is a liability. Remember, assets make you money. They put money in your pocket. Liabilities take money away. So, and gambling takes money away. Then you can make money, but you can also lose money. Gambling is all rigged. It's all not rigged, but you have a box. It's four-corner box. With the stock market, you don't have no box. You say something like Tesla in 2020, a share was $50. Now it's worth $800. I mean, off the stock. And even if Tesla goes down to $300 a share, I mean, you're still up $200. With the gambling, you're not that. You're just gambling your money away. Also, a stock, it can make you passive income. It can get you dividends. Dividends will come in every quarter, every month, and you get this passive income. Well, you have to work for it. With gambling, you're not making no passive income. You can only make money while you're physically there and you're physically gambling. It's the only way for you to make money. Unless you do it online, but you have to physically gamble the money, and you're taking risk. Stock market is less risk in gambling. If you invest in great companies that have been around for like 50 to 60 years, the chances like Coca-Cola, Walmart. Do you think Amazon do you honestly think Amazon will go away? Do you honestly think, your personal opinion, do you think Walmart will suddenly crash and go away? Do you think Kroger will go away? Do you think all these Coca-Cola, do you think they will go away? They've been in business for years. Do you think they will go away? Okay. Exactly. Do you think they will just fade away? Do you think Nissan? Do you think Honda? Honda been around for decades. Nissan been around for decades. Not going anywhere. Do you think Nissan will go away? You think that stock will just disappear? These companies will outlast us. So they're better than stocks. I mean, they're better than gambling. Gambling, you're betting on a football team, you have the 50-50 chance. Your team might lose. Your team might win. Look at the Patriots, the dynasty era. They was undefeated. I think they lost to the Giants, I believe. They were undefeated. They was the best team in football. They had the best quarterback, best receivers, the best head coach. Everyone probably bet for the Patriots to win, and the Giants won. And they was undefeated. So again, you have, it's not in your control. With the stock market, it is my control. I can sell the share, I can hold the share long term, And also, the most important thing you can do with that stock is you can pass its assets down to your kids. Okay? You can pass the assets down to your kids. You can pass it down to your children. You can't pass down gambling. You can't pass that down. You can teach them how to gamble, but they can't pass it down. But these stocks can be passed down to your kids, to your kids' kids. They can just hold on to the stock forever. You feel what I'm saying? The dividends, I could transfer all of them. You know what I'm saying? So gambling is nothing like investing. And again, you're investing. You are investing. You put something in to get a return back. That's investing. Gambling is not investing. Investing, it's your time. You're investing money, your time. You're building something. You want to get some out of it. You're investing your money to get some out of it. You're investing in dividends to get a dividend. You're investing in stocks to get dividends back. And gambling, you're not getting anything back. You know, you're not getting your full return back. And you know, you go to Vegas. Me and I went to Vegas a couple years ago, and we played slots and we didn't win anything. You know, I probably spent like $50 on a stock. I'm on a slot machine. I didn't win anything. At least with the stock, I mean, that stock could have went up to $60. I could have sold it when it crashed and made a couple of dollars off it. You know, but the money's gone in gambling. So no, never put gambling and investing in the same category. Now, if you buy some bad companies, you're gambling on if they're coming back up. But you should always invest. And I'm not giving no financial advice. I'm not giving no stock advice. I'm not giving no gambling advice. I'm not giving financial advice. Don't even listen to me. But if you invest in bad companies, hoping they'll come back up, that's on you. You should always invest in great companies that you know. And that's the first lesson in investing in the stock market. Invest in what you buy now. Invest in what you use now. If you shop at Walmart all the time, buy a Walmart stock. If you like Home Depot, get a Home Depot stock. If you like Nike, get a Nike stock. You know, buy stocks that you use on an everyday basis. If you use Clorox, that Clorox got to start too. Buy Clorox stock. You know the brand, you know it sells, and you know people need it, and you invest in it. If you like a certain gas station, I invest in BP. I got 5 shares of BP. I can show it to you here. I got 5 shares of BP. So instead of going to Valero or Exxon or Shell, I go to BP for my gas. Because guess what? I'm putting money in the company that I own to keep it going, to keep them paying me a dividend. That's why I invest in BP. You know what I'm saying? So, and gambling ain't like that. You invest in great companies that you know that's been using for years, your parents used for years, and you can see it getting bigger. Do you honestly think Amazon will go out of business? Let's be realistic. Amazon is everywhere. And everybody uses Amazon. Do you think Amazon is truly going out of business? Do you think that $3,000 stock price will go down to $10? Do you honestly think that? Do you honestly think Tesla will go out of business? You have all these car makers trying to compete with Tesla. Do you think Tesla will just go out of business? Do you honestly think that? Do you think Lowe's or Home Depot, the only 2 really stores people shop at to get hardware, do you honestly think they'll go out of business? Do you honestly think that? Do you honestly think Kroger will go out of business? If not, you have the answer. So don't equate investing to gambling. Yes, stock market is risky, but you buy safer bets. You get an ETF that has a different bunch of stocks in it, and it's a little bit safer than an individual stock, but make sure you do your own research before you buy any stock. Again, you could lose money in the stock market. I'm not saying you can lose money, but you'll lose money way slower than you do on a roulette table or you do on blackjack. You lose $100 in like a minute, but the stock market takes a longer effect. And if you research your companies and you keep tabs on them like once a week to make sure they're going smooth. If you see something wrong with the company, if you see something going wrong with the company and you want to get out, then get out. One thing about stocks is 100%, not 100%, but it's 100% liquid. You can sell it like that and take the money and buy another stock. That's a good thing about the stock market. And like a house, you gotta go through a process of selling a house or selling some online. It's a process. With a stock, you can sell it and you can go ahead and just, buy another stock. So that's the end of my video. Never equate gambling to investing. Because remember, we're investors. We're investing. It's no different if somebody invests in real estate. They'll buy property for $100,000. They have a mortgage on it, and they rent it out, and the person pays them rent, and they take that rent money and they pay the mortgage payment, and what's left is theirs. They invest the money. They invest the time. They found the renter. They did all the contracts. They formed the LLC. It's no different than the stock market because we're by passive income. Real estate is just a passive income that's physical, and stocks is a passive income that's you can't see. It's virtual. It's very boring. So this is my channel. Welcome to it. Subscribe to it. And I'll see you next time.